Welcome to Century Casinos Q4 2019 earnings conference call. This call will be recorded. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session. I would like to introduce our host for today's call, Mr. Peter Hoetzinger. Mr. Hoetzinger, you may begin.
Good morning, everyone, and thank you for joining our earnings call. With me on the call are my co-CEO and the Chairman of Century Casinos, Erwin Haitzmann, as well as our Chief Financial Officer, Margaret Stapleton. Before we begin, we would like to remind you that we will be discussing forward-looking information, which involves a number of risks and uncertainties that may cause actual results to differ materially from our forward-looking statements. The company undertakes no obligation to update or revise the forward-looking statements, whether as a result of new information, future events, or otherwise. We do provide a detailed discussion of the various risk factors in our SEC filings and encourage you to review these filings. In addition, throughout our call, we refer to several non-GAAP financial measures, including but not limited to adjusted EBITDA. Reconciliations of our non-GAAP performance and liquidity measures to the appropriate GAAP measures can be found in our news release and SEC filing, all of which are available in the investor section of our website at CNTY.com. I'll now provide a brief review of the company's financial results for the fourth quarter 2019. Following these prepared remarks, there will be a question and answer session. In Q4, the big story for us was the completion of the largest transaction in the company's history, the acquisition of 3 casino operations in Missouri and West Virginia from Eldorado Resorts for $107 million, representing a 3.5 EBITDA multiple. These are 3 quality assets in strong and stable gaming markets, each enjoying a leading regional position and each with a long track record of producing solid revenue and growing EBITDA. More on the encouraging initial results in a couple of minutes. With this acquisition, we have doubled the size of our company, which underlines the truly transformational nature of this deal. We are very happy to report that local management at all 3 properties chose to stay and become part of the great Century Casinos team of 3,500 cooperators. We cannot give enough credit to the senior management teams at all 3 properties. They have been first class during all steps of this transaction, from initial due diligence all the way through closing and integration into the Century brand. A big thank you for that. The big story for everyone these days is the coronavirus, COVID-19. We are carefully monitoring the situation caused by COVID-19 pandemic. Although the entire situation is unpredictable, our management teams are prepared to control what they can control. Our casinos are following and promoting the recommendations from the U.S. Centers for Disease Control and Prevention, which include everyday actions to help prevent the spread of respiratory viruses, such as washing your hands often with soap and water, avoiding touching your eyes, nose, and mouth with unwashed hands, covering your cough or sneeze with a tissue, cleaning and disinfecting frequently touched objects and surfaces, and of course, staying home when you're sick. We're also putting an extra effort into straightforward and realistic guest messaging and have stepped up employee trainings to ensure strict compliance with our policies and procedures. We are in constant communication with our employees to reinforce our sanitization safety procedures in both guest-facing and back-of-house areas. We are sanitizing high-traffic public areas at an increased frequency. Proper procedures are posted in all back-of-house work areas. To date, COVID-19 has not had any significant impact on our U.S. or Canadian markets, while the market in Poland has been weakening by about 10%. As most of you know, our customer base is very diversified within North America. Our casinos are local casinos in urban and suburban locations, with the vast majority of our business from customers who live within an hour from our facilities, outside of markets frequented by tourists. Our casinos have negligible meeting and convention business, and very few of our customers, if any, travel by air to visit us. This tempers the impact of COVID-19 on our business, but as we all know, this situation continues to change. Okay, with that, let's move on to the results of the fourth quarter. Net operating revenue was up 49%. Adjusted EBITDA was up 69%, boosted by the 3 new casinos, which contributed for 3 weeks in December. We wrote off the entire investment in Bath, UK, which led to a net loss for the quarter and the year. Talking about Bath, we recently entered into an exclusivity and confidentiality agreement with a potential buyer. We should know more about the outcome in 1 or 2 months from now. In Canada, the Edmonton segment showed a 58% revenue increase, mostly because of the new addition of Century Mile Racetrack and Casino. EBITDA was up 6% only, again because of Century Mile. Simply put, it still costs too much to generate the revenue. Getting the EBITDA margin to a more normal level at Century Mile is certainly the goal for this year. In the Calgary market, it's quite the opposite. Revenue was flat, but EBITDA was up 10%. The expansion at Century Downs opened in late November and already contributed strongly to EBITDA, just as we had planned it. Our operations in Poland had a great quarter too. Revenue was up 14% and EBITDA was up 48%. The Colorado segment had flat revenue and flat EBITDA, but we are very excited about sports betting going live in about 2 months. We have 3 sports betting licenses available and have already entered into 1 agreement with Circus Sports out of Las Vegas. 2 more agreements with sports betting companies are in the works. As many of our competitors, we simply provide the licenses, no investment, and get a percentage of the revenue with an annual minimum guarantee. Overall, it will be a meaningful increase to the Colorado EBITDA for sure. In the segment of West Virginia, the newly acquired Mountaineer Casino, Racetrack and Resort contributed $8.7 million in revenue and $1.3 million in EBITDA in the 3 weeks of December. And in Missouri, the casinos in Cape Girardeau and Caruthersville added $7.4 million in revenue and $2.6 million in EBITDA during that 3-week span. We can't stress enough how excited we are with the acquisition of these 3 operations. Not only did they come at a very attractive 3.5 EBITDA multiple, they are also performing great, even better than expected. Revenue is up significantly at all 3 casinos for the first 2 months of this year, and we are confident that we can increase EBITDA margins even over what El Dorado did. We are in the midst of rebranding the 2 Missouri properties to Century Casinos, and we leave the well-established Mountaineer brand in place. Lots of things have been going on at these 3 properties since we took them over in December. The integration into our reporting, marketing, database and IT systems has gone very smoothly, and a number of operational improvements have already been implemented, such as the replacement of about 5% of the worst performing slot machines with new products, and the reconfiguration of the gaming floor layouts, which have shown immediate positive effects. We will now focus on further optimizing marketing spend and planning a calendar around the promotions which drive the most excitement for our customers at the most efficient cost. On a pro forma basis, giving effect to the acquisition as if it had occurred at the beginning of 2019, we have 5 casinos in the US, 5 in Canada, and 8 in Europe, with a total of 7,200 gaming machines, 285 gaming tables, 430 hotel rooms, and 3 horse racetracks. We generate pro forma net operating revenue of $423 million and $54 million in EBITDA after all rent expenses. These numbers do not include any synergy effects at all, and going forward, we expect revenue and EBITDA to grow further due to the recent expansion at Century Downs, sports betting in Colorado, Century Mile ramping up, and eliminating the losses in the UK. On a pro forma basis, our leverage on traditional net debt is 2.5, and our lease-adjusted net debt leverage is 4.1. Maintenance capex in 2019, on a pro forma basis, including the new properties, was about $10 million, or approximately 2.5% of revenues, down from 11 million a year ago. Our well-maintained asset base requires minimal levels of maintenance capex to sustain current levels of revenue and profitability. It certainly helps that the Alberta Gaming Commission pays for 100% of slot machine capex, and the West Virginia Gaming Commission pays for 50% of slot machine capex. All right, before we go into the Q&A session, here are the current and very encouraging revenue trends for the first 2 months of this year. As already mentioned, Poland is down about 10%. Colorado is up mid-single digits. West Virginia is up mid-single digits. The Edmonton segment is up double digits. So is Calgary. And Missouri is up double digits as well. The first few days of March confirm these trends. Thus, everything points to a good start to the first quarter. With that, I thank you for your attention, and we can now start the Q&A session. Chris, go ahead, please.
Thank you. Ladies and gentlemen, at this time, we will conduct the question and answer session. If you would like to ask a question, please press star 1 on your phone now, and you will be placed in the queue in the order received. If you find that your question has been answered, you may remove yourself from the queue by pressing the pound key. We are now ready to begin. Our first question comes from David Bain with Roth Capital. Please state your question.
Great. Thank you. I guess the first question I have is just kind of given everything that's going on, does this make the opportunities out there, time to negotiate acquisition, does this put things on hold, or does it actually make things, more lubricated for you, if you will? Our understanding is that the REITs are still open with respect to deals you're looking at. Is that the case, or have you been in touch with them of late?
Hi, Dave. Yes, REITs are open. Other like debt funding that's not so certain. And the targets out there, when the publicly listed companies, they don't consider them to be sellers, of course, at this point in time with the low stock prices. But we are looking at other properties, have been looking for quite some time, and giving it a little bit of time. I think come summertime, you'll see us active again. We don't want to rush anything just because of the current virus situation. That will not trigger any actions from us on the M&A front.
Okay, got it. And then, Peter, also, just looking at the public revenue and some of the numbers that you cited through March, congratulations, by the way, especially with regard to the new domestic portfolio. I'm hoping to get an idea of EBITDA flow-through. Is that kind of close to the same revenue growth? Should we look at that, or does that expand and get refined through the year? How do we look at the kind of the flow-through as you've increased revenue at the properties?
If the cost and expense structure stays roughly the same as it has done in January and February, in other words, if there is nothing coming because of this virus situation, then the EBITDA should grow by a little bit more than the revenue growth. That's why we are pretty confident for now that we can even improve on the Eldorado margins.
Okay, and then just last one, just to follow up on your coronavirus comments. So outside of some movement in Poland, you haven't seen any impacts to offerings, given they're local, they don't have a lot of fly-in. But Century Mile, that is a portion of its patron base that comes from the Edmonton airport, correct? Or are you not seeing any sort of impact there?
Erwin?
At the moment, we don't see anything yet. So far, so good.
Okay, fantastic. Thanks, Peter. Thanks, Erwin.
Yeah. Thank you.
And again, please press star 1 if you'd like to ask a question. Our next question is from Chad Bainon with Macquarie. Please go ahead.
Hi, good morning. Thanks for taking my question. Wanted to just ask one more on the coronavirus. And all the color that you gave so far has been very helpful. But within, I guess, the close regions where you have properties, are you aware of any other measures that the local, county or city has made in terms of like school closures or any other things that could potentially, scare your patrons from coming? Or do you feel like at this point, the regions where you operate, I guess the hype is a little less than what we're seeing in some of the major cities? Thanks.
This is Erwin. I think at this point we don't see anything, but that can change.
Okay.
Colorado has some schools closed as of today, I believe.
Okay. And then a common question that we're getting from investors this week is just around any leverage covenants. Obviously, your debt leverage is lower than most of your peers, but are there any covenants or any provisions within your debt documents that we need to be aware of?
We're very covenant light, but Peggy, can you go into a little bit of detail?
Agree, Peter. We're covenant light, and we would not expect to trigger any covenant issues at this point in time.
Okay. And then the last one, just with respect to your comment on, some of the items that you've done since the closing of the El Dorado properties. You said you're replacing, some of the lower performing machines. Is this something that you started already? I mean, could we start to see the benefits in, as early as late in the first quarter or second quarter? Is this something that's already been put into place? Just kind of help us with the timing of, maybe some of these revenue synergies.
Erwin, please.
This is Erwin. That has been partly put in place already. So a number of those slot machines that we got new are already on the floor, and some reconfigurations have been made as well. So yes, we will see, provided the business stays the same, we will see that already in the latter part of this quarter.
Okay. Thank you very much, guys. Best of luck.
Thanks, Chip.
Our next question is from Richard Smith, a private investor. Your line is open.
Yeah, good morning. Considering the considerable drop in your share price, would the company consider buying back shares at this time or in the future?
Hi, thanks for that question. That is always a consideration. At the same time, we look at our cash needs to improve the existing operations, and we look what else is out there to improve our stock price. But this is one consideration that we have. But there's nothing that we will do like immediately, because we are still finalizing our immediate capex plans for the properties that we just acquired. So don't expect anything immediately to happen.
Okay, but the company does have ample cash to buy back shares if you can, within the next, I don't know, couple of months, if you have to, if the stock drops, let's say, into the 2s or something.
Yeah, we have about 51 million cash on hand, and we have lines of credit. So be it a share buyback or other very important capex things that we have on our agenda, yes, we have the cash.
Okay. Thank you very much. Thank you.
Thank you.
Our next question is from Steve Caspel with RJ & Associates. Please state your question.
Hey, guys. Thanks for taking the question. Just real quick, you kind of just addressed this, but I just think the market is not understanding the strength of your balance sheet, and just if you could reiterate that, because obviously the stock at this price doesn't make a lot of sense. So just wanted you to kind of reiterate that.
Yeah, thanks, Steve. Listen, we have, I think, one of the strongest balance sheets in the gaming industry. 2.5 net debt to EBITDA leverage is really pretty healthy. But at the same time, we've all been through various crises over the last 30 years. When Erwin and I founded the company in '92, everything with the word casino in the name has gone through the roof in terms of stock price. And then we had, over the last almost 30 years, we had various situations where many of our small competitors or highly leveraged competitors did not survive. We are still here with a balance sheet that's almost stronger than ever. And you will find us continuing going forward on a more conservative way compared to many others.
Okay, thank you.
Yeah, thanks, Steve.
Our next question is from Brad Boyer with Stifel. Please ask your question.
Yeah, thanks for taking the questions, guys, and sorry if you've already answered these. I had trouble getting on the line. First question, Peter, for you. I noticed you called out in the release that, thus far, outside of Poland, you hadn't seen much of an impact from the virus on the business. Could you just kind of give us a sense of, does that comment relate to, up until, say, yesterday? Was that up till some other point of time? Just any context around that would be helpful.
Yes, Brad, that is up until yesterday. We don't see any real impact in Colorado, in West Virginia, in Missouri, and also in Canada. And we also don't see any measurements like closure of anything in the state other than Colorado. I think certain schools have closed. Poland is a bit different. But then again, so far it's around 10%, and that has been for a couple of weeks now. It's pretty stable at that number.
Okay, that's helpful. And then, obviously, relative to, the Albertan oil market, oil prices have been sort of, relatively low for a while now, but obviously there's been a little bit of a shock to the system in the last couple of days. Could you remind us just, what you believe to be your relative exposure to the oil patch in Alberta is at this point from sort of a customer sourcing perspective? I know over the years you sort of kind of helped us, frame the segments of the demand pool in Alberta. Any color you could provide there?
Yeah, that's a little bit of a worry for the Canada segment. The companies during the last oil crisis about 5 years ago, they have downsized. They say they have right-sized, so there's no talk of any huge layoffs or anything at all. But we are monitoring the situation. On the flip side of it is that, as you know, gas prices have a big correlation with regional gaming revenue, and with our new strength in the U.S. regional markets, there's, I think, a lot to offset a possibly weaker economy in Alberta with low gas prices helping us in the U.S. regional gaming markets.
Okay, that's helpful. And then, if we look at your Polish operation today, I realize it's a smaller percentage of the overall business than it was prior to the El Dorado deal. But, it's a nice little business. It's doing, the recent headwinds aside, somewhere in the neighborhood of, $10 or so million of EBITDA. I think it's still, relatively ignored by North American investors. They just don't really have a good feel for that market. How committed are you to owning that business long term? And is that something where you could potentially look? I know there's a couple opportunistic buyers out there potentially. Do you think that's a business that you could look to eventually, unwind at some point and kind of redeploy that liquidity elsewhere?
We're constantly considering various options, and with Poland, as you said, it's a nice little business producing solid numbers. We only had the hiccup 1.5 years ago, and that has still some kind of a negative effect, I believe, on some U.S. investors because it created some uncertainty, even though it was only a one-time event in the 30-year history of Polish gaming. The value of that investment is the big question because of the 6-year license, lifetime of a license. The question is how much can you really get if you put it on the market. We'll see. We have not decided yet. So far, we are very happy to own it, and it generates very good revenue and EBITDA for us. And cash flow because we are getting the dividends out of the country easily.
Right. Okay. And then lastly, I don't know if you commented on this at all, but just from a housekeeping perspective, did you mention at all what you think CapEx could look like for this year?
We've said that in 2019, on a pro forma basis, including the new properties, it was 10 million, down from 11 in 2018. And I'll pass that over to Erwin. Erwin, do we expect it to go a little bit higher because of some things that we implement at these new properties?
On one hand, yes, but on the other hand, at the moment, in the situation where we are now, we are holding off on CapEx for the next few weeks on things that are not absolutely necessary or things that are not in the middle of being completed. So depending on how quickly we can go back into normal mode, that will impact the total CapEx spend. So if we stay on the cautious side, it could be less than 10 million. If not, then it would be a little bit more because of, like you said, Peter, due to the investment in sale new products and other things in the new properties.
Okay. Thanks, guys. Appreciate the color.
Thanks, Brett.
Our next question is from Jamie Yako with MOAB. Please state your question.
Hi, guys. Good morning. So, Peter, Erwin, I may have missed it, but did you guys provide any commentary or updated outlook in terms of when you think you can get to full run rate on the Century Mile property?
No, we have not given that number. It's, as you said, it's ramping up slower than expected. Revenue is okay, but on the cost side, we are working and we are squeezing the numbers, and we're trying to get the EBITDA margin to where it should be. Any more from you, Erwin, in terms of timing, when we think we'll get there?
Yeah, it's hard to say. I mean, in non-quantitative terms, we see positive movement, and we're confident that we get it up, but it's hard to say. I mean, we see now already some impact, but how quickly it will all be done is hard to estimate.
Got it. I think you guys had previously said you thought by like second quarter you could have, you could be approaching that run rate. I guess, would you say, I mean, obviously with the virus and all the uncertainties, do you think first of all, do you think the run rate of $9 or $10 million is realistic at this point in time, longer term? And would you expect, I don't know, to exit the year at the very least on that run rate, just given kind of the uncertainties?
Can you say anything to that, Erwin?
I would say long-term it's realistic, but it's not realistic for 2020.
Understood. And what about just someone asked you about the flow through on the upside, but what about on the downside? You said Poland was down 10%. How do we think about the the flow through to EBITDA?
Yeah, I mean, same with the upside. On the EBITDA side, it's a little bit higher.
Okay. And I guess just lastly, a comment, just given kind of where your stock price is and the cash generation and the belief that this will pass over time, the virus. I think it would be, rather than, I get it, there's exciting opportunities out there, but just given where your stock is, I think, we feel strongly that you guys should be looking at buying back your own stock, at a normalized 25% plus type of free cash flow yield as opposed to, making further acquisitions. I'll leave it at that.
Mm-hmm. Thanks, Jimmy.
There are no further questions at this time. I'll turn the call back to Mr. Haitzmann for any closing remarks.
Yes, I would like to thank everybody for your interest in Century Casinos and for your participation in the call. For a recording of the call, please visit the financial results section of our website at CNTY.com. Goodbye.
This concludes today's conference call. Thank you for attending.